Luke Beckman from Central Valley Ag is our corn and soybean market analyst this week. U.S. producers have harvested 24% of this year's corn and 26% of this season's soybeans. Those numbers come from the U.S. Department of Ag's latest crop progress report. The agency's quarterly grain stocks report showed on September 1st growers were still holding more than 1.7 billion bushels of corn and nearly 200 million bushels of soybeans. Both stocks were higher than a year ago. We talked with Luke Wednesday afternoon at CVA's facilities in York and began by discussing Friday's estimates.
Yeah, last week really probably a little bit friendly on corn, honestly, just because it wasn't so bearish. Had intended to see higher stocks with the idea that feed demand really was not there in the fourth quarter. Wasn't the case. Really not too bearish on the corn. Soybeans, there was really nothing to talk about in the bean trade. The wheat side was burdensome though. We saw that there was not as much wheat feeding in that fourth quarter, so that has some trickle-down effects back into the corn and soybean markets.
Go a little further into what this tells us about demand for both.
Sure, yeah, and it really sets us up well for 16-17 in that first quarter. You know, I think that your feed demand, your exports, and ethanol are all going to be very good for corn in this first quarter and really the first half of the marketing year. So I think that will help lend some support to corn. I don't think it's obviously going to push corn into, the $4 type area, but it should provide some underlying support to corn. Once the export program starts to slow down in March as South America steps in, especially on corn, I think we'll run into some issues there.
Give me an update on what harvest is like in your area of Nebraska and what the yield results look like.
Sure, eastern Nebraska, Jeff, I would take a dividing line down Highway 81, and generally speaking west of there, maybe 60, 75, 80% done on the soybeans. You go east of there and really just getting a good start. So bean yield's very good from what we've heard. Corn probably not enough that's come out to have a good idea of what it is.
How has basis moved here as we've entered harvest?
Yeah, so with the good soybean yields, soybean basis is pretty defensive. You're going to see that reflected all over the place, processors, elevators. It's probably going to be that way for the foreseeable future. Once harvest gets wrapped up and put away, that'll have a chance to recover. Corn basis, we're really just getting into harvest. You're seeing those values start to back off a little bit as well. Would suspect as we start to see elevator space pick up and farm space get full, you're going to find some corn on the ground and weak harvest basis values.
I want to spend a minute talking about crude oil, which has been fluctuating a lot. Can you give me an overview of why it's doing that and the implications of it?
Yeah, I mean, really the end of the summer, Jeff, we've seen crude oil, rally from the upper 30s to close to 50 here for WTI crude oil. Really the OPEC decision a week ago, they talked about forming an agreement. That has not happened yet, it's just talk at this point. But that provided a little bit of a bid if those OPEC countries want to rein back production. Have concerns though about what that does. It probably encourages the shale producer here in the U.S. to ramp back up. There's also a very good carry in the crude market. So if they are presented with an opportunity, they could step 12, 24 months out and lock in profitable sales as crude producers. So I don't think crude's going to run away. I think that it only encourages production and keeps a cap on it.
Let's move down to South America. As the season begins down there, what do you expect for production?
Yeah, Jeff, so production in Argentina specifically for corn is supposed to be up, as much as 30% year over year. Favorable policy decisions by President Macri last December enabled higher corn, higher wheat production. Additionally, he announced this week that maybe the export taxes on soybeans were not going to get cut as they intended. So that could encourage some of those soybean acres to go back to corn. So South America is going to compete with the U.S. for corn exports when they come back online. Brazil doesn't have crop to export right now, so that's why we talked about earlier. March is really a critical time where we probably see things get a lot more competitive for corn in the world marketplace.
Tell me what your price forecast is for corn and soybeans here over the short term.
Yeah, so soybeans right now with the big yields really feels like, this is a good opportunity to be making some sales on those beans. We're going to get an idea of what this looks like next week with the S&D numbers from the USDA, but it sounds like the bean yield's going to keep going up. You're talking about a carry out, with a 4 in front of it, stocks to use north of 10%. I think producers just need to take a look and see how much of my crop do I have marketed and lay some beans off here at harvest. They're at good levels, yields are good, generally speaking. So take advantage of some of that on the beans. Corn-wise, we're presented with good carry in the corn market. You start looking out to March, maybe even July for this next year, and you're talking about prices $375, $380. Locking in that carry is not a bad thing to do. I mean, we've got a lot of open corn on farm with the producers we talk to, and taking some of that carry and just laying some risk off seems prudent here.
Do you like anything in the 2017 crop?
Yeah, we do, for the same reason. I mean, there's good carry when you step that far out. If we could get December corn up to $3.90, $4, great place to make sales. If we think the cost of production is going to be down 10%, you know, that's 25 to 30 cents on a break even from a year ago. So if we were selling corn at $4.25 a year ago, $4 sales look like a great place to start for 2017.
You hinted at this, but your thoughts for the crop report next week?
Yeah, so generally speaking, bean yields are expected to be up, corn probably steady to lower. One thing that the trade is talking about is higher acres for both corn and soybeans, so harvested acres creeping a little bit higher. At the end of the day, we've got two really big crops coming at us, and producers need to be prudent with how they're marketing.